Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside, as usual, Justin Frederick and Ryan Gerdes. All right, Justin, today is all about you, but we want to encourage everybody to text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON, because the information that we're going to talk about today just may completely change for the better your strategy for transacting in 2025. So we got the notes, or the information,
the news,
the story, whatever you want to call it.
Yeah.
Loan limits have
increased
gone up. So before we go into conforming loan limits and FHA loan limits and increasing, like, who makes this up? Who decides this? Is there like just a group of dudes in tinfoil hats somewhere in a basement in DC? Or like who does this?
Basically, Fannie Mae, Freddie Mac, and FHA. So Federal Housing Administration does this, and basically it's based on what they're seeing a need for as far as loan amounts go.
Why wouldn't they just put unlimited loan amount if you're approved for it? Because otherwise, the loan is going over to private investors. Mm-hmm. And last I checked, the government loves money.
Right. And I always question myself on that too, or I always question them on that as well. But I don't know. I don't know why they don't do an unlimited loan amount. I know that they're backing these. Maybe it has to do with an amount of funds available to write these notes. I'm not 100% sure.
I thought you knew everything.
Oh, yeah, I don't know that.
I don't know that. This is going to be the worst episode ever.
Wow.
Damn,
well,
dude.
Let's flip that around.
All right.
So exciting news.
Yeah, for 2025, conventional loan limits are up to $806,500. What's a conventional loan, and who does this cater to?
So conventional loans are Fannie Mae, Freddie Mac, and actually I just want to let everybody know that we've already moved these loan limits. We had an estimate of 802 back in the end of October, and so we've been working off of that 802 until this announcement. So now we're already funding loans at 806,500, so we're pre-funding these loans, and then we'll just sell them off after. We'll sell the paper to Fannie or Freddie after the first of the year, but we're servicing these notes and we're closing these now. So the people that are going to be your conventional homeowners are typically, we like to put people with a higher credit score into conventional loans, and the reason for that is there's what's called LLPAs. It stands for loan level pricing adjusters with conventional loans. And if you don't have a great credit score, you're going to get hit really hard on the interest rate with conventional loans. So we tend to move the fair to moderate and lower FICO scores over to FHA, but conventional, I like to stick with 720 or above. Now, we'll give the options for the lower FICOs as well into conventional, but typically they're going to choose an FHA product. So higher FICOs, 800 credit scores is a perfect product for them. Even not down payment. First-time home buyers, 3% down, conventional loans. So it's a product that typically people want to get into eventually, because eventually mortgage insurance doesn't exist with conventional loans.
So what are some other benefits? Because there's so many times we'll be looking at all these different options. Okay, and FHA historically has been a lower prime interest rate than conventional. So why the hell, if I have a better FICO score, am I getting a higher interest rate over the ones that are generally moving into the FHA realm?
So typically, first of all, FHA's loan limit's much lower than conventional. So that's a factor. But if you have an 800 credit score, you're going to get a much lower mortgage insurance premium, even with a high down payment on conventional. Like even if you're putting down 10%, you're going to get a much lower mortgage insurance premium. Also, FHA has an upfront mortgage insurance of 1.75% of the loan amount. So it's a very hefty fee. Now, another portion, a reason why we would choose conventional loans is conventional appraisers are just strictly using like comparables, whereas FHA is trying to find a superior and an inferior property to appraise the home with. So we like those those properties that are really just comparables. We're not wanting some that's inferior or superior.
That was a very PC way of stating that.
Yeah, for sure.
All right, well, you heard it here first. Conventional loan limits for 2025 have been increased to $806,500. Is that an Arizona-specific thing? Does every state have their own conventional loan limits?
So across the board, 806,500. Now there is different areas within the United States that have high balance limits that can go much higher. For instance, let's just use Arlington, Virginia. You know, there's a lot of very expensive homes there. So yeah, I mean the conventional loan limit over there, I haven't even looked at it, but I bet you it's somewhere around 1.5 million.
All righty. All right, if you'd like some more information about loan limits and how this impacts your 2025 strategy, go ahead and text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON. All right, let's move over to FHA loan limits for Arizona. And we got this somewhat broken down by county, but really for those that aren't familiar with the Phoenix area, Phoenix and the metropolitan area are inside Maricopa County. But for Maricopa County and Pinal County, which would be like Tucson, the loan limit has been increased to $546,250. For Flagstaff and Coconino County, $563,500. And then for the rest of Arizona and the counties, loan limits for FHA are $524,225. But more importantly, most of everybody that we speak to, not everybody, but are buying in Maricopa County, so loan limits increased to $546,250. Not bad.
Yeah, going up 16,000 is a great number. I mean, I would have loved to see a little bit more. I feel like we should have got to that 563 in Maricopa, just because it's calling for it. We need more of these types of loans for first-time home buyers, where majority of our population is.
A 3-point jump isn't huge.
No. So really was hoping to see, I was really hoping to see somewhere in the range of 600,000 in the FHA, but still it's good news. It still allows for
It's going in the
more,
right direction.
It's going in the right direction. You know, my biggest fear was they weren't going to adjust this. So at least we got an adjustment, and it's going to help out our buyers for sure. Yeah. I mean, it's not often, though, you have somebody buying a $575,000 home with struggling credit scores, typically.
Well, typically an FHA buyer is going to be a first, maybe a second-time home buyer, and that's usually kind of right there in the wheelhouse of what they're looking for. Not just because of what their wants and needs are, but because that's what their income dictates. Yeah.
Oh yeah, and sometimes they've had a life event, you know, like a divorce, or maybe they've had some kind of job loss where they're struggling with credit scores at the time, but their income's good. So typically, an FHA is a perfect fit for somebody that's gone through some type of life event that's hurt their credit.
Yep.
You know, Ryan, I mean, I know that the inventory numbers are up. They're not up tremendously, but they're up, you know, from where they were like 12 months ago. This is big news for people as far as I'm concerned, whether it's the conventional loan limits or FHA loan limits going up, because people were qualified at X amount and they may not have been getting the home and being able to look at homes that they like and that kind of fit into their family style. $10,000, $12,000, $16,000 increase all of a sudden opens up some doors for people.
It definitely does, especially those people that are in that need the FHA product out there. For the conventional part, you know, when you have a little bit more security, you know, typically you have, you know, 2-income households or strong credit or whatever. I don't know that the jump in conventional is going to help a whole lot, because they've been.
It's 40,000 though. It's $40,000.
Right. I get that. What I'm saying is, between the two of them, I think that the increase on FHA is probably going to be the most impactful out of the two changes, especially because we've been seeing a lot more people that are conventionally approved. They've been coming to the table with a lot more cash lately.
Mm-hmm. Oh yeah.
So they're not getting as horizontal. They're getting more vertical now because, you know, interest rate impacts, et cetera. So they've been. They say, okay, well, 806 is fine, but, you know, we're going to be putting down $300,000-$400,000 anyhow to stay into that conforming bubble. Now, talk to me a little bit about how you think this is going to affect the private market, the non-conforming.
Yeah, I don't think it's going to have any impact really. I mean, most of the people that are taking out jumbo products were typically $1 million plus. The people that are coming in close to trying to borrow 850, 900 were why don't we take out a second mortgage, get you into a conventional loan, have a second along with a conventional, just because traditionally interest rates on a conventional loan are much better than you see on the private money or the jumbo products. So if they're only about $50,000, $100,000 over conventional loan limits, typically I'm like, let's do a first and a second mortgage. It'll allow us to a lot of times it will allow us to even borrow more money than if we were to try to do a jumbo product. So no real changes with jumbos. Now, recently we've seen jumbo increases on what your typical private investor will lend on a jumbo. For the longest time, we were seeing max at 2.5 unless you got an exception to go higher. Now we're seeing a lot of these jumbos at 3.5, $4 million. And I feel like that's been in the last year, but each one of them are making their jumps at different times. And that's been very healthy for the market. Also, a lot of these jumbos, since we're on the subject, a lot of these jumbos have increased their debt to income ratios beyond what you would see with conventional or FHA products. We're seeing some of these jumbos go up to 55% debt to income ratio on gross income. So that's a big deal. And I feel like that makes sense because a lot of these jumbo borrowers are typically are business owners. And if you're making all that money, you're going to have extra money.
Do you think that that's kind of what prompted the Fed to make these changes?
I don't believe so. No,
Okay.
I don't believe so. I think it's really just a call for more conventional products and offerings out there to fulfill what they're looking to achieve for 2025.
But then also going just back to the overall market conditions, would they be jumping up like this if home prices weren't going up?
No.
Or they're anticipating for home prices to go up? If we were in the middle of a market crash and we were anticipating the market to drop in 2025, I don't see these loan limits going up.
I agree. I mean, basically from, I want to say like 1998 to 2015, maybe 16, we were at 417 for conventional loan prices.
Yeah.
I mean, it was
The good old
stuck.
days.
And,
And FHA was 271.
it was there for a while.
It was there for a long time.
Yeah.
So consistently, since they've started increasing it, we've seen it continually increase year after year, just because the market's calling for it. We need these conventional products. We need to be able to offer people solid interest rates and get them in homes.
All right, well, there you have it. Conventional loan limits have gone up for 2025, as well as FHA loan limits. If you want more information on how it impacts you, whether you kind of got stuck in the mud in 2024 just because of loan limits, and perhaps you're wondering if the increase in loan limits are going to change your strategy and open up the door to more properties, we want you to reach out to Justin. All you got to do is text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON.